Hi there, good afternoon. You're catching us on Markets at Noon and you're watching us on ET now. My name is Naisha. With me is Ankita Saxena, and let's take stock of what the market has been doing. We're at the midday mark of the trading session and as tepid as ever because 0.5% cut coming in on the market right now. We're struggling to hold on to that 26,000 mark for the Nifty 50 right now as we speak. For Sensex, a similar 0.4% cut. The India Wix has spiked up 3%. Nifty Bank 2 under some pressure, 0.6% cut over there. But it's the broader end of the market that has actually been losing steam because Nifty mid cap is lower by about 1.2% and the small cap index is lower by 1.7% on an intraday basis itself. It's a big blow coming into the small cap index. Remember, it was down 3% in the week gone by and has already started this week with a cut of almost 2% as we speak right now. So things are not looking good for the small cap end of the market. Indigo Aviation continues, Interglobe Aviation, pardon me, or as we know it as Indigo, continues to be under pressure. A 7.5% cut on Interglobe right now. You have the Supreme Court also giving its view on the matter. You have the JM Financial note that is flagging off an earnings impact and an internal impact for Interglobe Aviation as well on the back of their operational issues that they are facing right now. So 7.5% cut on Interglobe Aviation. On the flip side, Nifty 50 gainers are absolutely tepid. HDFC Life, Wipro, Tech Mahindra, HCL Tech not doing all that much. On the flip side, BEL is lower by 3.5%. Eternal seeing a 2.5% after a 0.5% block deal that took through market open today took place. JSW Steel, Geo Financial, Bajaj Finance, Max Health, all of them seeing cuts of anywhere between 1.5% to 2.5%. So the market setup is looking rather weak right now. If you take a look at the sectoral churn that we're seeing in the market right now, it's not looking all that great either because all the sectors are in the red, pardon me. Also including Nifty IT that was managing to eke out some gains given the weakness that we've seen in the rupee right now, but Nifty IT has also slipped in the red. The biggest cuts on Nifty Realty today, almost a 3% cut over there, and big cuts coming in for Godrej Properties, Oberoi Realty, Prestige Estates, Anantraj, all of them are not doing well at all. PSU Banks, Auto, Metal, Energy, Pharma, FMCG Banks and IT. That's your pecking order, with IT being absolutely on the flat line. So Ankita, this is what the market is up to right now.
Absolutely. It's a very tepid day of market at the start of the week, but let's get on board Rajesh Bhosale, is a technical analyst, Angel One, to weigh in on the markets and the way forward. Hi Rajesh, good afternoon to you and thank you so much for joining us. Rajesh, this is a rather tepid day, a rather tepid start to the week. Nifty, however, is managing to hold on to those 26,000 levels. So that becomes a very important support level for now. But going ahead, what are the levels to watch out for? And, at the close of this week, what are the levels that you see? And especially Nifty Bank, that has been an outperformer. The PSU pack in specific, but even that is not performing very well today.
Hi, afternoon, and thank you for having me on your show. So if we see Nifty marked a fresh new high last week, but there is no follow-up buying despite some positive outcomes like good GDP numbers and cut in rate cuts. Despite that, follow-up movement is not there. In fact, if we see Nifty is trading in a consolidation where 25,850 is acting as a support and 26,200 to 26,300 is the resistance. So we expect for the next few weeks Nifty to continue consolidate within this range, consider buying on the lower levels and to book at the higher levels. One need to be very selective because broader markets are under tremendous pressure while the Nifty continues to trade around its all-time high. Small cap and mid cap are under pressure. In fact, small cap has slipped below the 200 DMA. So one needs to be very selective. Similarly, for the banking space, we see a consolidation. If we see somewhere around 60,000, Bank Nifty is taking resistance, but on the lower side, 20 EMA has been acting as a strong support. So 58,500. 60,000 seems to be an immediate range. Same bias for this, buy on dip and look to book profit at higher levels.
Okay, so clearly your stock pickers market right now, Rajesh, and a bottom-up approach is the way to go. But amid a market like this, which stocks are looking good to you right now and what are your calls for the day?
So do two counters that are showing relative strength and we expect outperformance from this. One is HDFC Life. If we see, it's been in positive momentum since last three sessions and today it has crossed above key moving averages. So we expect HDFC Life to continue with its outperformance. with a stop loss of 757. One can buy for the near term targets of around 810 levels. The second buy call is on BPCL. If we see during the month of November, the stock had given a breakout around the levels of 350, and from there it had moved towards the 380 levels. Prices then saw correction mode. Last week we saw a strong weekly formation, and today, despite it's flat, it's showing relative strength. So we expect the uptrend to continue. So with a stop loss of 350 to BPCL can be bought. In the near term, we expect the recent highs around 378 to be retested.
All right, Rajesh, thank you so much for your picks and weighing in on the markets. We'll let you go on that note. But